All right, welcome to your rapid-fire revision for the NABARD Grade A exam. In just the next few minutes, we're going to connect all the important dots, from RBI's policies and government spending, all the way to financial inclusion and India's place in the world economy. Think of this as your final power-up before the big day.
So, how do we tackle something this huge in just a few minutes? Well, we're going to break it down into 4 critical pillars of the syllabus: banking, government finance, financial inclusion, and of course, India on the global stage. Let's do this. Okay, let's dive right into Pillar 1, India's banking core. First, we'll get a solid grip on what money actually is and the absolutely crucial role the Reserve Bank of India plays in managing it.
First up, we've got M1, what we call narrow money. The easiest way to think about this is the most liquid cash out there. You know, the actual notes in your wallet, plus the money you have in your current or savings accounts, basically any money you can get your hands on right now. But to get the full picture, we really need to look at M3, or broad money. This takes everything in M1 and adds in time deposits. You know, things like fixed deposits that are locked in for a while. This is the big one, the main metric the RBI watches to see how much money is really circulating in the economy.
Now, how does the RBI actually steer the economy? Well, it uses this, the Liquidity Adjustment Facility, or LAF corridor. Think of the repo rate in the middle as the main policy signal. It's boxed in by the MSF at the top, which is like an emergency borrowing rate, and the SDF at the bottom for parking extra funds. This whole channel guides all the other interest rates to keep inflation in check.
And here it is, the magic number that drives everything we just talked about. The RBI's main job, its primary objective, is to keep consumer price inflation somewhere inside this 2% to 6% band. Pretty much every major policy decision comes back to hitting this target.
Okay, let's switch gears to Pillar 2 and talk about the government's budget and its fiscal policy. This is all about the nation's wallet, where the money comes from, and, just as importantly, where it all goes.
This table here breaks the entire budget down into 4 neat sections, and understanding the difference is key. See, revenue items, that's all about the day-to-day running of the country. But capital items, that's where the future is built. We're talking about long-term assets like highways and ports that are going to fuel growth for years to come.
So, where does all that money actually go? Well, have a look. The single biggest piece of the pie is for interest payments on old debt. And that's a huge deal because it's a committed expense, which means it really squeezes how much money is left over for everything else, from defense to development projects. A classic exam topic right here. With the direct tax, like your income tax, the burden falls squarely on you. You earn it, you pay it. Simple. But with an indirect tax, like GST, a business might collect the tax, but they pass that cost on to you, the consumer, every time you buy something.
So what happens when all that spending is more than the revenue coming in? We get the most watched number in any budget, the fiscal deficit. And why does everyone obsess over it? Because this number tells you exactly how much the government has to go out and borrow that year just to fill the gap.
Now for Pillar 3. We're going to zero in on a topic that is right at the very heart of NABARD's entire mission, financial inclusion. This is about connecting that last mile.
The JAM Trinity has completely revolutionized financial inclusion in India. I mean, think about it. By linking Jan Dhan bank accounts, Aadhaar ID, and mobile phones, the government created this digital highway to transfer benefits directly to people, plugging all those leaks and cutting out corruption.
For the exam, you're definitely going to want to be familiar with these flagship schemes. Take the Jan Dhan Yojana. It's brought hundreds of millions of people into the formal banking system for the very first time. And then you have the Mudra scheme, which is all about getting credit to small Main Street businesses.
And this really gets to the heart of NABARD's unique role. See, it's not just about money and finance. It's about empowering communities from the ground up. And the Self-Help Group Bank Linkage Program is a perfect example of that vision in action.
Okay, for our final pillar, let's zoom way out and take a look at the big picture, how India engages with the major global economic players on the world stage.
Here's a great little cheat sheet for your exam. The easiest way to remember this is, the IMF is like the firefighter for short-term crises. The World Bank, that's the architect for long-term development projects. And the WTO is the referee, making sure everyone plays by the rules in global trade.
Just look at this timeline for a second. It shows India's incredible journey on the global stage.
It tracks this evolution from being a country that needed an IMF bailout loan back in 1991 to becoming the nation that set the global economic agenda as the host of the G20 in 2023. What a transformation.
And speaking of the G20, this is the premier forum for international economic cooperation. As a key member and recent president, India now uses this incredibly powerful platform to help shape global economic policy, really championing issues that matter to the entire developing world.
So what's the ultimate takeaway from all of this? It's about seeing how these four pillars connect. How does an RBI interest rate hike affect credit flow in a small village? How do government schemes and global trade trends influence each other? Seeing those links, that is the absolute key.
So there you have it. You've just revised the core concepts across banking, fiscal policy, financial inclusion, and international relations. You've got the framework. Now, go apply this integrated knowledge with confidence. Best of luck.